to me, that's sort of like the Sputnik moment where I think, the other countries around the world, especially the US, are saying, hey, whoa, if we want to win the AI race and also maybe just win the economic race, we've got to beat them and we got to start matching that pace. And we got a lot of room to make up for right now.
As you correctly said, once you see it, it's the kind of thing that you can't unsee. And by the way, when coal is 15% of, your coal burning is 15% of all the world's energy, in addition to making an enormous amount of electricity, you can make a ton of steel. So China produces 13 times the amount of steel that the US does. And when you have a lot of cheap energy and a lot of steel, you can build a pretty big army and a big
Build a
navy,
bunch of ships.
bunch of ships and planes and tanks and guns and bullets and artillery shells. Like, what are we thinking that we're going to go to war with China and win near them when they are just a dominant power now?
Welcome to Thoughtful Money. I'm its founder and your host, Adam Taggart. In today's discussion, we look at the all-important energy market. Remember, without energy, there's no economy. As we look to the future, where are global energy trends headed? How are the policies of the new administration likely to impact these trends? And where are the best opportunities for investors likely to lie? To discuss in depth, we're fortunate to sit down with the green chicken himself, the energy expert Doomberg. Doomberg, wonderful to see you again. Thanks so much for joining us today.
Adam, it's been too long, my friend. Looking forward to talking to you again.
Thank you. And it has been too long. I'm so glad we're remedying that now. But very glad to see your continued success out there in the world. Doomberg, as a publication, just continues to crush it. One of the most popular Substacks out there, and for very good reasons. Anyways, look, just in terms of big question I have here is where to start, Doomberg. There's just so much going on right now. We've got the world consuming more fossil fuel than ever. It seems to be practically drowning in natural gas at the moment. Nuclear energy is suddenly the belle of the ball in a lot of spaces. I don't know where to start. What are currently, in your eyes, the most significant energy trends of 2025 so far?
I think you have to start with the geopolitical situation in the Middle East, which has been the real key driver of near-term energy market prices, at least for oil and international liquefied natural gas, a lot less so, of course, U.S. domestic natural gas. And so your view of the energy markets for the rest of 2025 is really an expression of your view of the probability of war or peace in the Iran-Israel question. We watched with great fascination how the oil markets behaved during what is now, I suppose, known as the 12-day war between Israel and Iran. And we learned a lot of things internally, and the oil markets really guided our view of that war to come to some counterintuitive views as to what actually transpired as opposed to what the propaganda is saying happened. And the oil markets were pretty steady throughout that whole episode and really called the end of the war long before the war ended. And so, once again, markets are pretty instructive. They're not always right, but as an input into your models, what the markets are telling you is a really, really important thing. So happy to take it any direction from there, Adam, but really, in a world where peace remains in the Middle East, our view of the market is that it's very well supplied. Oil prices have an equilibrium of around 55, we would guess. We can explain how we come at that number. And anything above that at the moment, given the ample nature of the supply and OPEC's desire to regain market share, is really just the geopolitical price premium. So we would say today, as we're recording this, there's about $13 a barrel of geopolitical risk premium priced into WTI, which is pretty reasonable considering that the ceasefire is somewhat tentative, and one never knows when hostilities will break out again. But that's our holistic view. That's the most important question. It's really the determinative question for investors in the near term.
Okay, so you say $13 a risk premium. So the day we're talking here, Doomberg oil's trading at about $68 a barrel. So that's 13 above your equilibrium price of $55 a barrel there. I'm not an energy expert like you, obviously. I have heard that sort of the sweet spot for oil prices is about $70 a barrel. That if it gets much lower than that, it's hard for the producers to make money. If it gets much above that, it starts crimping economic growth. So help me understand why the $55 per barrel is what you consider to be the equilibrium price.
Sure, I'll tell you how we calculate it, and then we'll tell you what the one thing that many analysts don't think about when they think about the sweet spot of oil prices and how sustainable that is. So we think that $10 per million BTU landed LNG is the price of LNG where everyone in the chain can earn their cost of capital. And there's 5.6 million BTUs in a barrel of oil. And so if you multiply 10 by 5.6, you get 56. So our equilibrium price is around $55 a barrel. Now, what does natural gas have to do with the price of oil, you might ask? Well, for one, on the demand side, there's a certain degree of fungibility between the two, which is why you see the Dutch TTF natural gas contract trade on an energy parity basis with Brent crude almost 1-to-1. During normal times, during times of crises, these things can blow out and such sort of equilibria get distorted, which is one of the ways we measure whether we're in a crisis. So, for example, throughout the entire Israel-Iran war, that 5.6 correlation between landed LNG and Brent crudes, it held. And that was an indication to us that the market wasn't pricing in a closure of the Strait of Hormuz, for example. On the flip side, because of the shale revolution, oil and gas are now co-produced in vast quantities in the US. And so when you think about what the break-even price of the production of oil in the Permian is, you actually have to look at the combination of the price of US natural gas and the price of oil, adjusted for the ratio that those two commodities are now co-produced together in places like the Permian. And so the two commodities are becoming linked. And yes, OPEC would very much like for oil to trade at $70 a barrel, and producers in the Permian might very much like that. But in a world where, say, AI demand increases the demand for natural gas in the US to feed data centers, and the price of natural gas goes up, the break-even price for the associated producer, the producer that produces both, the break-even price of oil then comes down. And there's even a world where, let's say, natural gas in the US gets to $5 or $6 per million BTU, oil might become the byproduct that the producers in the Permian have to give away. And the break-even price of oil in the Permian could be zero. I mean, again, it depends on the gas to oil ratio of the wells they're drilling. But the shale revolution has forever altered the oil markets in ways that few are articulating. This is one of the things we've been writing about for a very long time. So not only are the two products fungible, you can burn oil to make electricity, you can burn natural gas to make electricity. You can run your trucks on diesel in China, or you could run your trucks on LNG in China. The production is coupled too. And so in the long run, the two prices have to kind of converge. It's sort of a physics thing. And as a framework for analysis, it's a wonderful tool because you can see if things are in equilibrium or out of whack, and you could tell what the market is telling you on a whole different plane than just looking at, for example, if you're an oil analyst that grew up in the old days, you think that crack spreads and oil inventories are what are driving the price of oil. Well, you're missing a really important parameter because now they are co-produced with natural gas, and they've always been fungible with natural gas to a certain extent. And so that's our view of the market. OPEC keeping the price of oil at 70 when the equilibrium price is 55 is the thing that is undermining the Jenga pile over the long term, because it is telling the producers in the Permian to produce more oil than it otherwise would, which causes them to produce more natural gas than they otherwise would, which causes natural gas to be artificially cheap, which causes new uses for natural gas to develop, which ultimately erode the demand for oil. In the long run, all hydrocarbons will sell for the same price corrected for energy content. And OPEC is only accelerating its own demise by trying to artificially inflate the market.
Okay. Wow, there's so much interesting things to pull into there. So you talk about this fungibility. You and I have talked about this in a number of your previous appearances here. end of the day, a hydrocarbon is a hydrocarbon. Um, we are increasingly finding ways to uh, to I guess burn hydrocarbons or break hydrocarbons for energy uh, beyond just the traditional ways we have in the past, especially around oil. Um, uh, and there does seem to be a growing, not just supply of natural gas, especially domestically, but also a growing number of new ways to use it as an oil substitute, as a liquid hydrocarbon fuel substitute. Do you expect that to continue going forward from here? In other words, will the demand for oil at the margin perhaps start, increasing, maybe even at an accelerating rate here as we find more and more hydrocarbon substitutes for liquid oil?
Yeah, let me give you a real example just to show you how this has to continue. I mean, the forces of arbitrage are really fundamental to how the economy works, right? So in the Permian Basin today, at the Waha Hub, you can buy natural gas in the spot markets for $1.80 per million BTU. That's roughly $11 a barrel of oil. Now, imagine you're operating heavy machinery in the Permian and you have the choice to fill up with diesel or to invest in a new engine that runs on natural gas. There's a break-even point where you invest in a new asset that runs on natural gas because it is literally selling for 1/7 of the cost of oil, and then you tack on a refining premium on top of that to get the diesel, right? And that just can't go on forever. That which can't go on forever usually doesn't. And so we run our economy on engines, gasoline engines, diesel engines, and jet fuel engines that are sort of the equilibrium endpoint of what was available when those engines were built. We fly planes on jet engines and we run trucks on diesel and we run passenger cars on gasoline because when we do that, we use the barrel. By the way, we have asphalt for roads because we need to use the barrel. A refinery is an enormous mass coming in and going out, and any
Mhm.
small impurities not used build up and overwhelm the system. So, like the reason our roads are asphalt is because we refine oil. Um, you have to do something with every carbon atom that enters a refinery because they come in at such scale, you can't waste any of them. Now, we are drowning in natural gas. We modeled internally that there's an infinite amount of natural gas in the world. Um, and so, where it is co-produced with oil and oil is artificially held high, you have this dirt cheap hydrocarbon, and all you really need to do with a hydrocarbon is burn it to create heat. And so, because of that price delta, which is real and measurable and sustainable and investable, we will just switch the engines. And there's profit to be made in switching the engines. And over time, the engines will switch, especially as these price differentials persist. Natural gas, in many ways, is far better than oil or the products derived from oil, except for one critical one, which is it's difficult to handle. But once the midstream operators, who, by the way, run oligopolies and earn significant amounts of money in doing so, they're in the pipeline building business with American energy dominance on Trump's agenda. We like to say that oil and gas companies get to build stuff during Republican administrations and they get to make money during Democratic administrations. And that's exactly what we think we're going to see during the Trump administration. Oil prices will be sagging and there'll be a lot of complaining, but at the same time, they'll get permits easier and Trump will refill the SPR and they'll get all manner of things built that they can then make a lot of money when the Democrats come in and make it hard to drill again and prices go up. And so we're in that phase of the cycle, and investors need to realize that that's the phase of the cycle we're in. We're going to build stuff. Oil prices, gas prices are going to go down. Trump wants gas prices and oil prices to go down and to stay down. And he's campaigned on that. It should be no surprise to anybody. We said 95% of oil and gas companies probably voted for Trump, and they're voting against their stocks because the prices are coming down for those equities that are tied to the price of energy as opposed to just its volume. And so, armed with thermodynamics, you can see the large trends. And then when the market substantially deviates from those trends, then those become investable opportunities.
Okay. To your point about, I don't know if it was, just a intentionally inflammatory comment or not, but the fact that, hey, we might get to a day here where oil is the byproduct of the drilling versus natural gas. Um, there seems to be, you mentioned that you guys calculate that there's a near infinite amount of supply of natural gas. Again, America's very rich in it, but so are other parts of the world, like Russia, and apparently Russia natural gas is kind of piling up in the world stage too. So we've got all these cheap hydrocarbons here, right? And markets being markets, they'll say, okay, we'll take advantage of that. And you talked about some of the engine switching that I think is already underway. But we also have some new energy demands, right? So AI, right? AI is going to demand a whole bunch more energy. There is a massive arms race in terms of just production of electrons that's happening at the very least between the US and China, but really any country that wants to be a serious contender in the AI race. This largely will require a rebuilding of the American electrical grid. We have a lot of companies that don't want to wait that long, and they're kind of going direct to their own energy production, um, tapping into natural gas sources. So I guess where I'm going with this, Doomberg, is one, is natural gas kind of the most interesting energy source right now? And two, could we decide to invest so much in it going forward that we kind of break this cycle that you're talking about, where oil companies make money in Democratic administrations and then have tougher times in Republican administrations? Could we get there? Could we get to a point where demand goes down for oil and it doesn't really materially return to its previous highs just because the world is now increasingly geared towards natural gas?
That's our base case, yeah. And like to your point, we don't think the grid can handle AI and meet residential and industrial electricity needs at this time. So it must be that AI will be served off grid. We made this call last year, I believe, in a piece called Irreconcilable Differences. Um, the demands of AI have a clearing price for electricity that is far higher than any politician can tolerate. And so it's just not going to happen. And so the breakthrough idea, by the way, if we were seeding a startup, we'd figure out a way to better have natural gas be converted into data than the current mechanism, which is to spin a turbine and create electricity, because turbines are in short supply right now.
Mhm.
But whoever makes natural gas, so just take another piece that we wrote, I forget the title. Um, if you're a country that's rich in natural gas and you're currently selling it on the LNG market, why not just build data centers right there and skip the journey? Skip the freezing, skip the shipping, skip the regasification and all of the pipelines in between, and just build data centers in Qatar and build data centers in Malaysia and build data centers in Russia, in the Arctic. And by the way, 50% of the energy needs of a data center are in cooling. And boy, wouldn't it be great to build a data center in the Arctic and then just send the data, via satellite to wherever it needs to go. It's a lot easier to send data around the world than it is to send methane.
Right.
And that is what's going to happen. And entrepreneurs will make that happen. And so, to your point, it's not a flippant comment. There is a world where, to the marginal AI data center operator, $10 a million BTU natural gas is a steal. It's clean, it's reliable, it's right there. We park it right next to the well. And at $10 a million BTU, let's think about the Permian. So what's been going on in the Permian today? Because OPEC has artificially held oil prices too high, they have been prioritizing low gas to oil ratio wells, GORs. There's all manner of gas-rich wells that have some oil that come with it that have not been drilled yet, because gas they have to give away and oil is the premium product. In a world where natural gas becomes the premium product, oil becomes the nuisance. They just dump it. But oil, unlike natural gas, is a liquid and it's globally traded. So people in the Permian dumping nuisance oil affects global oil prices. People in the Permian today dumping nuisance natural gas affects very regional natural gas prices only, because there's no offtake capacity. It's just there. there's an infinite network for oil offtake capacity. And so in a world where Google, Facebook, NVIDIA, Oracle, OpenAI, pick your favorite, they all set up shop in the Permian and they're competing for natural gas. Oil becomes a nuisance. Again, the co-production aspect of the shale revolution is the least well understood and perhaps the most important impact on the long-term markets for energy. So like OPEC today is engaging in another price war with the Permian producers. Price wars,
So,
but always fail, and this
mhm.
one will too because they don't just make revenue from oil. So sorry, go ahead.
No, I didn't mean to interrupt you there. So from a technology standpoint, I'm asking you to prognosticate here, Doomberg. What do you think is more likely to reach commercial scale first, mass commercial scale first? The sort of next generation of nuclear technology, or at least nuclear reactors, and that nuclear, really starts contributing more materially in a way to the national energy supply. Or is it these solutions that let uh, private and public industry better tap into natural gas and you know, start to wean themselves off of other energy sources and perhaps increase their overall capacity because they're tapping into this almost limitless and right now at least very cheap natural gas?
Yeah, it's undoubtedly natural gas as is measured by speed, which is why we wrote a piece called Bridge Burning that covered this exact issue. And it's also why GE Vernova is at a 52-week high, despite being saddled with a wind turbine business that has billions in liabilities. Who is GEV, the stock ticker? GE Vernova is one of the major builders of gas turbines, which convert natural gas into electricity, and they have a bottleneck of many years and elevated pricing power, and that's why their stock has been racing. Um, Solving a gas turbine bottleneck is a lot easier and quicker than building, well, permitting, building, and regulating new reactors, especially new designs, let alone the old ones that are already sort of copy and paste. The Trump administration is working hard to shrink that regulatory barrier. But as Elon Musk proved in that piece that we wrote, he's sort of the exception that proves the rule. He just built a bunch of gas turbines without any permits in Nashville. There's a lot of controversy about it, a lot of local issues, but like he proves what could be done and what will be done. Just do it with natural gas, and he did it very quickly. He built the world's largest supercomputer, allegedly, using natural gas with unpermitted turbines, because that's just what Elon is allowed to do. Um, Now, you'd never see Microsoft or Google doing that, but he is the exception that proves the rule. It'd just be so much quicker to do it with natural gas. So the one constraint in the world, by the way, this is not a stock recommendation because ultimately all shortages are followed by gluts, and there will be a glut of gas turbines on the market soon. And once that glut of gas turbines presents itself, then the natural gas demand will materialize.
Then the boom will happen because
Then
this
the
is
boom
going to
will
be more
happen.
affordable. Yeah.
Correct. So GEV does not have a monopoly on turbines, and of course, once the Chinese get into the turbine business, all bets are off. So in the long run, we think this is actually bad for GEV because it will induce competitors into the market that would otherwise not have arrived. But they will print a lot of cash between now and then.
Okay. And it will be good for the American economy because all this energy will
Correct.
enable incremental economic growth.
And Russia, as an AI superpower, is on our board. We just wrote a piece about Russian natural gas and where it's going to go. We're publishing a piece tomorrow on China's coal energy advantage and how they've parlayed that into global supremacy. Cheap energy means geopolitical power. And as a framework, energy is really amazing to see those trends.
Okay. There's a chart I'm going to try to find. I put up here once or twice in previous videos, Doomberg, but it shows the electrical power generating capacity of, I think it's China, US, Europe, and India. And India is very fast growing, but it's the lowest of the four. then it's Europe, and US is a little bit above Europe. And the capacity has grown at a very flat rate for decades.
Yep.
And then you see China, which is far and away above everybody else, and it's just shooting the moon right
Yeah.
now.
We
And
we
that
we sorry, go ahead.
I was just going to say, to me, that's sort of like the Sputnik moment, where I think, the other countries around the world, especially the US, are saying, hey, whoa, if we want to win the AI race and also maybe just win the economic race, we've got to beat them, and we got to start matching that pace. And we got a lot of room to make up for right now. So it's hard not to see that as just saying there's going to be a tremendous amount of focus from a national security perspective on just getting a lot of these energy solutions deployed, and dramatically increasing America's energy production capability.
Yeah, so you're basically that chart is in our piece tomorrow. It just has China versus the US. And by the way, when you look at that chart, do you think, boy, that's a country we could probably go to war with near their supply chains and win? Like that's the main thrust of our piece tomorrow is,
Mhm.
when you look at that chart, it's pretty eye-opening, as you say, Sputnik moment. I will read the paragraph to you that is in that piece, the first paragraph after cut to pay, because it's we did not coordinate this in advance, but we're clearly thinking similarly. Look, when a single country's coal consumption accounts for 15% of the world's total energy supply, it gains the ability to generate enormous amounts of electricity. And today, China operates the largest and arguably the most technologically advanced power grid on the planet. And as you correctly said, while the US has struggled for decades to meaningfully expand its electricity generation, China has surpassed it by a wide margin in a trend that shows little sign of reversing. It is a staggering chart to look at. Um, I'll send you our version of that chart if you want to use it when we're done recording.
Please.
But it is truly, as you correctly said, once you see it, it's the kind of thing that you can't unsee. And by the way, when coal is 15% of, your coal burning is 15% of all the world's energy, in addition to making an enormous amount of electricity, you can make a ton of steel. So China produces 13 times the amount of steel that the US does. And when you have a lot of cheap energy and a lot of steel, you can build a pretty big army and a
Yeah,
big
build a
navy,
bunch of ships.
bunch of ships and planes and tanks and guns and bullets and artillery shells. Like, what are we thinking that we're going to go to war with China and win near them when they are just a dominant power now? Like, and so the social preview of the piece, which is called Hoodwinked, is how China hijacked climate fears to achieve global supremacy.
Hmm.
China has been funding an enormous amount of green climate agenda politics in the Western world and the US in particular. And the opening story to that piece is a really remarkable subcommittee hearing chaired by Texas Senator Ted Cruz, who we have some serious ideological differences with, but it was an interesting hearing to listen to nonetheless, where he described how China has been funneling money into the climate environmental lawfare nexus to stunt US energy production. And we think he's right on that. So they hook us on renewable energy for which they have monopoly control over the supply chains, wind and solar. And at the same time, they make it hard for the US to take full advantage of its natural abundance in gas and coal and oil. All the while, it is burning an enormous amount of coal. China today, in 2024, burned as much coal as the entire world did, including China, in 1995 when the first United Nations COP meeting was held, when the global warming stuff really kicked off. The entire world burned about 90 exajoules of coal in 1995, and China today burns more than 90 exajoules of coal by itself. China does not care about climate change. It cares about geopolitical power. And it has successfully executed a brilliant mission, which we should lament and we should work to undo, but also we should take into account when we're deciding whether or not China is a foe that can be taken on militarily at the moment.
Um, all right, wow, sobering, and I sense you and I are going to be talking about this topic again, probably multiple times in the future here, Doomberg. Um, Let me ask you this with China. So the U.S., um, I mean, you've said something that's always stuck with me, which is it's always easier to change a political constraint than a geological one. So we can look at what we can have this Sputnik moment. We can choose to react to it, right? We can start doing things differently. It seems like we already in the process of changing our behavior. The U.S. is privileged to be very rich in a lot of these energy resources that we're talking about. Um, what is China's energy supply chain like? Is it mostly domestically sourced, or are they dependent on other parts of the world to get this coal, to get their natural gas, et cetera?
Yeah, so it's a great question. We did a whole Doom Zoom Pro Tier presentation last year called "The Year of the Dragon: China Through the Lens of Energy," where where we went through all of this. And in fact, I'll email you a link to it if you want to put it into the show notes because we've since made it free to everybody.
Please do.
Yeah, so China domestically is self-sufficient in coal, and coal is a huge chunk of its energy. It has a diverse sourcing strategy for natural gas. It produces about 40% of its own natural gas, um, and it imports most of that delta via pipeline, Turkmenistan, Russia, and then it also brings in some LNG, but it is opportunistic in LNG and sometimes will resell cargoes that it has sourced under long-term contracts if the spot markets are favorable, like it did during the European energy crisis. It is deeply short crude oil, but it has hedged that risk substantially in ways that we describe in that presentation and that we've written about that few recognize. It has invested. So when China is short a commodity and it's a national security issue, this is what it does. It finds the earliest part of the supply chain where it can dominate through financial investments alone. And in this case, that is in the refining of crude oil. So it actually has more refining capacity than it needs by a wide margin, and more refining capacity than even the US has. And so, in a world where China is short crude because of geopolitics, let's say Iran had closed the strait, China's neighbors suffer just as much as China does. And so it's in the world's interest now that China get its crude, and that is what China does. And you have to recognize that your geopolitical opponents aren't dumb, right? And so the only real chink in China's energy armor, by the way, it also gets an enormous amount from hydroelectricity,
Right.
and it swings between coal and hydroelectric power depending on the weather, which is why if it rains a lot in Sichuan province, the price of coal in Appalachia might come down. Like these markets are interconnected in ways that are
Hmm.
pretty easy to understand, right?
Yep.
And so, and they've also built out some renewables with what we believe is just the excess capacity of the factories that have been built to satisfy Western demand.
Hmm.
Um, and so it has really played its energy cards quite brilliantly. The only thing it's missing is crude. And even there, it is building out rail networks directly to Iran, where it can circumvent these naval choke points. Um, and there's, of course, with Europe shunning Russian natural gas and oil, a lot of those flows might eventually get to China in
China.
that way as well.
Yeah.
And so it does have one critical weakness today, but only one. Every other aspect of its energy is domestic. And by the way, they have been engaging in really huge nuclear power build out. They will soon surpass the US in the number of operating reactors. That is a supply chain they can control. They build nuclear power plants at a speed and for a cost which is unthinkable in the US. Korea is pretty competitive with China, to give Korea credit where credit is due. We just wrote about Korea. Um, and on top of that, it is engaging in what we believe is a massive project of ultra deep drilling to tap into abiogenic or abiotic oil, should it exist deep below the surface and the sort of biogenic theory of oil proved to be incorrect. It is undertaking a massive drilling campaign, which people assume is more about geothermal power, but we actually think they believe that there's oil deep below the mantle, deep below where it's currently believed it could exist. And they are trying their best to try to tap into that. And there's no country in the world that would benefit more from such a breakthrough than China. So I think China is a very formidable geopolitical adversary
Sure.
and is working incredibly hard to become totally self-sufficient.
Well, and there's a I guess depending on your point of view, either virtuous or vicious cycle here, but virtuous cycle where the more energy you produce at lower cost, the more surplus energy you have to invest in creating even further advantage, right? So
Correct.
you can afford to do these ultra deep drilling things and whatnot. And hey, if they don't pay off, it doesn't really matter because we were doing it sort of with our surplus energy anyways. But if it does, hey, we just made an investment that almost nobody else in the rest of the world can make, and now we're going to benefit from reaping its rewards. So yeah, I mean, it is fairly sobering if you're not on Team China from an energy perspective.
I mean, this is the way the world works, though. Like, this is the nice thing about this. It could be sobering if you're Lindsey Graham, um, you know, um, worried about the next war. But as an investor and an analyst, it's actually interesting and exciting because you know, just by doing such analyses or subscribing to Doomberg and hopefully listening to ours, um, there's what must happen or what should happen is knowable. Whether it happens and the timing for it to happen are, of course, different things. But what should happen is actually quite noble. So when we study China through the lens of energy and put together that 45-minute presentation, and if you listen to it, which I hope some of the people listening to this will do, and maybe you will, Adam, so that when I come back and we talk about China again, you'll see that it's all very straightforward and sort of physics based. Here is the current situation. Here's where they get their energy today. Here's where they get their coal. Here's where they get their natural gas. Here's where they get their oil. Here's where they get their hydroelectricity. Here's where they get their renewables. And what are the weaknesses? You do a standard SWOT analysis, strengths, weakness, opportunities, and threats. And you could just see, okay, this is the biggest weakness and this is the biggest threat to China, and here's what they're doing about it. And it's quite predictable. And then when you observe substantial deviations from what should be, those often present opportunities that are quite investable. And so you don't need many sure things in life. One every 2 or 3 years is great, like Warren Buffett classically says, right? Like most of your money is made doing nothing, and
Right.
the vast majority of your gains are made when you make big bets when you are sure that you have significant upside and limited downside.
All right. Well, I am going to get to the what investing opportunities you see right now. We'll get there in just a moment. Before we get there, though, let me ask you this. So, uh, Doomberg, you and I have done these interviews long enough that we spent several years talking about the energy situation with the policies of the previous administration, which are very different than the policies of the new Trump administration. Um, Curious to hear your thoughts on the significance, the benefits, the drawbacks, however you see it. Call whatever balls and strikes you want. But how do you feel that the new administration's policies are likely to impact these trends that we've talked about?
Yeah, so there's, as I said earlier, right? Build during Republican, make money during Democratic. That actually is actually quite true if you look back historically. There's
You said it
one
was for oil. Is that sort of true for any energy source?
anything that requires a permit, that requires, expedited government partnership, nuclear, natural gas, wind and solar, actually, although Trump has crushed those industries. There's one significant risk to what Trump is doing, and it's just in the nature of the whiplash. So, um, the planning cycle of heavy industry is longer than the political cycle of the US.
Right.
And so, as much as we think that wind and solar may be foolish or unnecessary, or detrimental to the grid, what has happened to those industries is patently unfair. During the Biden administration, um, it was all guns ablazing, invest your money, the government will be there to support you. And Trump has basically, with a stroke of a pen, wiped out entire equity stacks of multi-billion-dollar companies who were only doing what the US government under Biden was instructing them to do.
Yeah.
It's unfair, actually, but it won't always be a Republican administration. And so the mere presence of such whiplash increases the risk profile and therefore the cost of capital of those who wish to embark upon such enterprise. And oil and gas companies might be all in favor today. Drill, baby, drill, get your permits, federal lands, no big deal. We're going to tell the EPA is going to tell us that CO2 doesn't matter here in a couple of weeks. All that changes with one election and Gavin Newsom gets into power. So who wants to stroke a multi-billion-dollar check with a 15-year payback time horizon when the political scene might change in 3 years in the U.S.? So that's a significant risk, and it's unstated. Again, the on the scale from Biden to Trump is everybody else as it comes to energy, and that manner of change is just not healthy. You would much rather invest, frankly, in a totalitarian country like China, where the policies don't change, the government support is locked in.
You've got stability and predictability.
Correct. And so money goes where money is respected, and a bunch of capital got torched in the renewable space. Now, I don't think that capital should have been deployed in the first place, and we would never deploy capital where the government is absolutely paramount in what your returns will be. But it goes both ways, Adam. And so oil and gas capital might not want to go into the U.S. just because Trump is welcoming it with open arms today, because who knows what Gavin Newsom is going to do in 2028.
Okay. All right. So got it. But beyond that, which that's kind of out of Trump's control, right? Is the market skepticism that just, hey, even if you're telling us stuff you like, President Trump, we're just not confident that someone's going to be sitting in the White House in 5 years or 10 years that thinks the same way you do. His other policies, largely deregulation, drill baby drill, mine baby mine, whatever. Is that putting wind at the sails of the American energy complex or not?
It's putting winds at the sails of those companies that are leveraged to the volume of energy produced, not its price.
Okay.
So if you're an oil producer, you don't necessarily like that. On the one hand, it does allow you to plan for multiple years and to maybe get access to things that you wouldn't have gotten access to. But the price of your product, and you're a price taker, is going down. And we've been warning about this long before Trump was elected and before he was inaugurated and since he's been inaugurated. This is not good for the price of oil. Trump wants low oil prices, and he's likely to get it. If you are a volume leveraged supplier of gas turbines, sand in the Permian,
maybe one of these midstream operators.
Midstream operators, somebody who can handle produced water in the Permian, which is a big problem. If you're a land royalty company, those are the types of players who tend to do well in all markets. And those are the among the rare things that we would consider investing in personally in this market. The long-term real price of all commodities is lower because the commodity producers are deflationary machines. And so you don't really want to invest in the commodities unless things get really out of whack. There's one exception to that, which I'll tell you. And you don't really want to be investing in the commodity producers who are price takers. You want to be investing in the picks and the shovels, classically. There's a reason why these things become folklore in business schools, because they're right. The one exception is you don't want to ever really get long commodities. You just want to be prepared to fade them in the presence of a super spike. So if war had grown to the point in the Middle East where Iran closed the strait and oil shocked and went up to 130, 150, 180, 200. You wait for the high to be put in and it drops 20%, and then you can safely, it's not investment advice, you can buy 6-month puts at half the current price, and it's almost always pays. Because all spikes are followed by gluts. Gluts aren't always followed by spikes, but spikes are always followed by gluts. Because I can assure you, there isn't a producer in the world that wouldn't be turning the spigots on happily at $150 oil.
Right. Yeah.
And in 6 months, when it all comes to the market at the same time that the strait is reopened, oil is going to be $35 a barrel.
Exactly. Yeah.
Right.
We see the same thing in farming too, right?
Exactly. It's far better to fade the super spikes than to try to time them, because timing is uncertain, but the super spike is real as you observe it. It's kind of like Pascal's wager at that point. If oil isn't below $150 in 9 months, the world is over. So who cares what your portfolio is doing?
Well, should we call this Doomberg's rule, which is when there is a super spike, wait for the 20% retracement and then get your
Then you
puts?
could buy your 6 months out of the money puts at half of the current price. To give credit where credit is due, we learned this from Nassim Taleb, who had a brilliant Twitter post to this regard that we have quoted a couple of times in our pieces. So we're not afraid to steal other people's great ideas, and we always are very careful to give them credit for it.
All right. So I guess maybe we'll have to call this the Taleb rule.
Yeah, much better because if it doesn't work, you can blame him.
Okay. So last question here on policy, but just okay. So you've kind of given us the answer from industry, right? Give us the answer from a national prosperity standpoint.
Oh,
These
look,
more the policies we need. And in your answer, if you can just comment too on what you think of the new energy secretary, Chris Wright, whether you think he's the right kind of guy for the job or not.
100%. Look, from a national geopolitical power perspective and prosperity perspective, Trump is 100% right on energy, and Chris Wright is the perfect man for the job. ExxonMobil and Chevron and other E&Ps aren't going to like it temporarily, although they play a longer game than the smaller operators, and they will buy many of the smaller operators on the cheap on depressed oil prices, then make a ton of money when the next Joe Biden comes in, which is what they've done for decades. But from a national prosperity perspective, Trump is 100% right on energy. We disagree with Trump on many, many things. He is stone cold right on energy and manufacturing and the need for redomesticating supply chains and on tariffs, even if his implementation has been rather clumsy. He has the right instincts. He knows what has hurt America in the last 50 years and is trying his best, we believe, sincerely, to undo those things. Whether he succeeds or not is an interesting question, but he is 100% right on energy. He has good instincts, and if he succeeds in his ambitious goal to achieve American energy dominance, he will leave a legacy on par with what Dwight Eisenhower did with civilian nuclear energy, with the national highway system. Eisenhower was truly one of the great U.S. presidents, and his legacy is still benefiting the country today and will for the next 100 years. The most important thing a president can do is get energy right. And on this topic, regardless of your partisanship, it is undeniable that Trump is 100% right.
Okay. And it seems like a big part of what's going to need to happen from here, we've already mentioned it a bit, but is that the national energy grid is going to have to be rebuilt. What time frame or what realistic time frame is that going to happen in? Is it going to be 5 years? Is it going to be 50 years? Which we be prepping for?
I don't think it needs to be rebuilt if they can figure out how to go modular in building data centers. The thing that actually needs to happen for us to be able to rebuild us in the US, to be able to rebuild the grid is to redomesticate the supply chains. China owns the supply chains for transformers and other electrical equipment, electric motors, pick your favorite thing. When you outsource every important supply chain to China because they're willing to pollute in order to gain monopoly power, you are then beholden to that country. And this is why China's grid is growing on the chart that I'll send you when we finish recording. And the US's is not, because China prioritizes its domestic demand before it allows those companies to export. So we have a shortage of transformers. We have a shortage of turbines. We have a shortage of all manner of complex electrical equipment to make that happen, which means it can't happen until we fix that, right? It'll be fixed, but in the meantime, innovative ways to drive AI capacity off grid are going to be an amazing way to make a lot of money for a lot of entrepreneurs. So like when we analyze the situation and we say to ourselves, okay, we can't unstick the grid for 3 years. There's huge demand for AI. There's a huge supply of natural gas. Anybody who invents a way to convert natural gas into data that doesn't involve the current constraints is going to be the founder of a unicorn. And that's how we think. That's how we invest privately. And those are the types of opportunities that we look for.
Okay, so this is the segue into where you see investment opportunities. That's obviously one, and obviously anything you're saying here is not personal financial advice. This is
Sure.
you as an energy analyst looking at the world through your energy goggles. Are there any other uh, parts of the energy supply chain right now that have your interest from an investing standpoint?
Yeah, so anytime where you have a glut that's about to be on stock, that particular commodity is interesting. So, for example, natural gas in the Canadian West. As we correctly predicted, Mark Carney ascended to his appointed role as prime minister, even though people think that he was voted in by the public. Um, and correctly, as we predicted, he is going to make the necessary changes in Canada to make major nationally significant energy projects more readily approved. We're going to see a build out of LNG export terminals up and down the coast of British Columbia, which is going to make natural gas in Western Canada no longer a nuisance, but a prized commodity. And you could also see data centers built out there because it's cold up there, and half of the energy of a data center is in the cooling. And so, when we look at the Permian or we look at Western Canada and you see natural gas prices that are sub $2 a million BTU, that's not a situation that could last for a very long time. But any company that is facilitating the closure of energy arbitrage is the type of company that interests us. So you look at the Permian. So just to give you a number, by the way, in Alberta today at the AECO hub, natural gas is $1 per million BTU, which is $5.50 a barrel oil. You think that's going to last forever? Of course not.
Wow, no.
Right. So I just pulled it up on the Bloomberg machine while we were talking. Um, any company that closes arbitrage. So you say to yourself, okay, natural gas is free in Alberta, and there's demand for data centers, and Canada is a Western country, right? Maybe I'm in the data center business in Canada. All right, that entity is going to do pretty well. Or a private company that is building a fertilizer plant in Alberta to take advantage of that cheap natural gas.
Right. Because
Right,
the natural gas is providing the key, what is it,
right.
phosphorus?
Right. No, natural gas is ammonia. And
Yeah,
so,
ammonia.
right. So you do you make syngas from natural gas, and then you make ammonia, and off you go. Um, so any company that closes large arbitrage. So today in Alberta, Western Canadian Select is trading for who knows, like $55 or $60 a barrel, and natural gas is trading for $6 a barrel. Like any company that will convert diesel engines for mining trucks into natural gas is probably going to make some money. We can't give tickers and names, but those are the types of themes that you want to look for. So any company that exists to close arbitrage and any company that makes money from volume as opposed to price. Those are the two broad categories of things we would be personally interested to invest in our private market activities. And to the extent that there are some publicly traded companies that claim to want to do that. One of them, of course, was Chris Wright's Liberty Energy, and he did quite well with that company because Chris Wright's company was leveraged to the volume produced in the shale patch, not the price of the products coming out of it, because they did, services. So services, midstreams, and immediate downstream companies that benefit from low natural gas. Third category is any company that produces a product that has a global price, but is fed by energy locally, i.e., natural gas. So, if you made polyethylene from NGLs, ethane, and you built a polyethylene plant in, Pennsylvania, and you got dirt cheap NGLs, and you were able to sell your polyethylene on the global market where the marginal producer is using naphtha derived from oil, you're going to be on the low end of that cost curve, that industry cost curve, until that arbitrage closes. Those are the types of things that we use energy as a framework to look for as investable opportunities.
All right. And uh, looking at 2025 versus 2024, 2023, et cetera, are you finding that those opportunities are increasing or decreasing?
Um, there's always going to be opportunities that derive from arbitrage. You just need to be able to scan the markets in a way that allows you to spot those arbitrage opportunities. So, like one of the charts that we watch every day is coal, natural gas, and oil, all priced in dollars per million BTU. So you can see which of the fuels are cheaper where and what is going to be the regional drivers, right? Natural gas is a highly regionalized market. Any company that makes that market more efficient and more global is going to make a lot of money because, again, the forces of arbitrage is what you want to ride. You want to surf that wave. If physics says this should happen in the long term, that is a great starting point for your analysis of where you should invest.
Yeah.
And that's always going to be the case because it's going to take decades for these global markets to truly harmonize.
Okay. All right. It's a super useful framework to use as an investor in this space. But let me ask you this, Doomberg. So during Canada's most recent election, where Carney won, and I think you think that was maybe sort of a scripted fait accompli. Um, Trump uh, he offended, I think, the general public in Canada with his derogatory comments, not just to the previous prime minister, but also, Canada should become the 51st state, and said a whole bunch of other things that I think understandably insulted the Canadian pride. And some are saying this is one of the reasons why some of these reforms are now getting pushed through with some more alacrity here, which is that we sort of woke up Canadians to say, you know what, we've gotten a little bit too comfortable in our dependency on the US, and they're not necessarily treating us the way that we want to be treated. We need to be a little bit more independent. Let's start addressing some of these things that we were letting America take care of us, take care of for us, and we're going to do more of it of ourselves, like exporting a lot of our domestically produced energy. And you talked about what's going on in the Canadian West here. Was that a strategic blunder for the US, or was this going to happen anyways, or is this now creating opportunity that once tempers simmer, America can help Canada achieve some of these things?
It's funny. It occurred to me that we haven't talked since we made this call all the way back in December, before even Mark Carney was a contract that you could bet on Polymarket. We correctly predicted that Carney would be installed, that there would be a fake sort of constitutional crisis in Canada, and that Trump's objective was to help Mark Carney win, and that Carney, even though he has a long track record of being, globalist elite, WEF, he was the central banker of England and the central banker of Canada, which is kind of crazy, but shows you the close ties between those countries.
Mm-hmm.
That Carney would actually unstick Alberta's energy, and we called all of this beginning on December 7th in a piece that we wrote called Alberta Clipper.
Hmm.
And at the time, it was a bold call. And we've written several follow-up pieces to that original one. But literally, when we called Carney as replacing Trudeau and winning the election, the Conservative Party, Pierre Poilievre, was 93% on Polymarket.
Right.
And you couldn't bet on Carney. And this is the one regret where our policy of not investing in what we write about came back to bite us. Because I could have personally made a killing on this call. And in fact, that piece, Alberta Clipper, on December 7th, I will also send you, for the show notes, a magic link to the free behind the paywall full piece to it. It wasn't perfectly predictive then, but we wrote a follow-up piece very quickly where we pushed even harder on the fact that Trump wanted Carney to win. And one of our rules around here is we develop mental models, and we don't actually have to understand why they're right. They just have to work. And we early on, because of our own knowledge of Canadian politics and how the country's run, got the sense that they were positioning Carney to become the prime minister. And it was after we wrote Alberta Clipper where we came to the further conclusion that Trump really did want Carney to win, and that the Alberta succession issue would be used as cover for Carney to make the grand compromise, and they would again forget about all this climate nonsense. And they did, and that Trump was in on it. And so the whole 51st state thing and knocking Justin Trudeau was Trump's setting the stage. So the 51st state questions Canada's sovereignty. Suddenly you have an Alberta crisis because Alberta is the wealthiest province in Canada. It's all in that piece. And then when you have a crisis, you can make compromise on issues that seemed impossible. And you have to kind of be Richard Nixon going to China, Carney ending the carbon obsession of Canada. That was our call, which we nailed early. And it has really probably been the best call that we've ever made just because it was so out of nowhere at the time that we made it. And so it has played out almost perfectly as we predicted. And so it's one of the calls that we're pretty proud of.
Wow. Well, kudos for the call. I think that's just further validation in addition to the expertise you've shared in this interview, Doomberg, just of the analytical chops that you and the team there at Doomberg have. So it sounds like you're saying Trump's mudslinging there really was more like WWE style,
Yes, exactly. Yeah.
manufactured outrage.
Yeah. No, and Trump does this. Like this, one of the things you have to learn when observing Trump is, first of all, his Truth Social posts aren't policy. Many times they are misdirection and
Mhm.
provocations and exaggerations. But also, if you follow him closely, you can actually get a pretty good idea of what he actually believes. And in this case, it was very clear to us that he didn't like Trudeau, and for a variety of reasons. Mark Carney was the chair of the board of Brookfield Asset Management, and Trump has a long history of direct and indirect dealings with that very powerful firm. And Carney is the type of person that Trump probably feels like he can do business with, and so on. And so he made it pretty clear just by reading the tea leaves what he actually wanted. And we wrote a piece, a follow-up piece to that Alberta Clipper, which I'll also send you, I guess, since it's already, let's repurpose the content and maybe induce a few people to subscribe. On April 16th, before the election, called "The Fix Is In: Trump, Carney, Smith, and the Future of North American Energy." And again, even back then, people were kind of pretending that maybe Carney wouldn't win. But I'll send you both of those, and there'll be a good indication of our shops. And look, we get stuff wrong. I don't want to, we're not afraid to get stuff wrong. And when we get stuff wrong, we write a follow-up piece and figure out why we're wrong and explain how we're going to improve based on that lesson. But the only thing worse in this business than being wrong is having no opinion. And our view is that if you express your views politely, authentically, and show your homework, there's no downside in making a bold call.
Oh, not at all. And especially, you share your work. If somebody comes back with a rebuttal where they can prove in the math that they've got a better
Sure.
beat on the math than you do, great. Everybody benefits, right?
And I get to write another piece. We're always looking to write another piece.
Okay, great. All right. Well, look, we're going to wrap up in just a sec, but I want to ask you one last thing here about something you said. I remember reading a book, and I'm blanking on who wrote it. Negroponte was the fellow's last name. And this was a book about the coming digital era, right? And this was really talking about the internet right as the internet was beginning to hit mainstream. And he talked about how one of the main things that it was going to do was going to replace uh, the transportation of atoms with the transportation of bits, right? A good example of this might be if you want to buy a product, rather than shipping the product out to all sorts of different stores and waiting for someone to go into the storefront and decide to get that product and then bring it home, you can have a website where people can go look at a digital representation of the product, order it, and therefore the product only ships once, right? Those atoms only ship once. So your concept that you talked about earlier about a data center, locating the data centers where it's cold, because cooling is a very important part of running a data center. You have processing power, and those processors, the more you tax them, the hotter they get, right? And then they start becoming less efficient. Whereas if you can keep them nice and cool, you can run them much closer to their maximum for much longer and get a lot more data crunched by the data center. So this concept of locating data centers where it's cold, letting the natural cold of the Arctic cool these things, and then letting the data all get created and processed, and then just shipping the bits rather than having to try to figure out how to build a lot of data centers elsewhere around the country and then ship fuel to them and whatnot. And that's shipping the atoms. It's a really interesting concept. Do you see kind of a renaissance in Alaska and Canada because of this?
Oh, 100%. And Russia. Yeah. Again, if you sort of think of the sort of the grand human endeavor, this um, the singularity, Kurzweilian vision. We wrote about this in a piece called Fission Chips, which is one of our favorite
One of
titles.
your best named articles. Yeah.
We give full credit to our mutual friend Grant Williams for coming up
For that one.
with that title. If you think of the grand human endeavor of ever more computing is really the heat management issue, because that is the constraint, right? And so anything that solves that issue, that allows you to send more bits around the world, is going to be in hot demand. Um, why humans are forever trying to compute more is an interesting philosophical question. But if you look at the curves in the singularity is near and you project them forward to 2025, more than a decade after the book was published, um, it's just a trend that why would any investor bet against? And so this is sort of back to that whole concept of we have a model. We don't necessarily need to understand why. We just need to know that it works. One of the greatest trends in the world to bet against is human total compute. To bet with, sorry, and one of the dumbest to bet against is human total compute. The humans will reorganize its entire economy to keep that curve growing exponentially. It's a very similar concept with global human energy consumption. Up and to the right, always linear with sinusoidal aspects because of the business cycle and the capital cycle of the energy sector. But never bet that global human energy is going to go down. Always bet it's going to go up. Same thing with compute. So whatever it is that's needed to drive the giant human computer um, is something worth betting on because it's going to happen. Um, these are just mega trends. There's some irresistible force driving them, and it's foolish to bet against them. You don't need to understand why, you just need to understand what. It's nice to understand why. It's useful to understand why, but it's not necessary to understand why.
Mhm.
Um,
Because if you get the what right, you win. Yeah.
sure, as an investor, again,
Right.
as a philosopher, as an ethical, as what does it mean to be human? The convergence, the subtitle of the singularity is near, if I remember it, is when humans transcend biology. Maybe humans don't want to transcend biology, but it's coming, right? And nobody's stopping to ask the ethical questions. I can assure you that the open source artificial intelligence development ecosystem is far beyond what OpenAI is doing, what Google's doing, what Facebook is doing, or Meta, I guess they call themselves. Strange rebranding, must be said. Um, and it's unstoppable. You're not going to stop two people in India from collaborating on open source AI development. The beast has been unleashed, right? And so when we see, again, humans always compute more, humans always consume more energy, and all arbitrages eventually close. Those are the three things you need to be an investor, in my mind. Everything else is interesting and nice, but if you see large arbitrage, it has to close. If you see a supply shortage in energy, there will be a glut, and whatever it takes to keep humans on that exponentially growing compute line will be done.
All right. That's fascinating. I love those three operating principles for thinking of just what's inexorable in this space. Um, but I guess a sub bullet of those is uh, because cooling is such a limiter on computational power that I wonder if you could make the corollary that as the human compute ecosystem, which will include AI and everything that happens in the singularity and all that, if we think of the world as having a computational brain, that brain is highly likely to migrate north, or we could say to the poles over
Sure.
time.
Yeah. Absolutely bullish for naturally cold places. But there's, other ways to do that. I personally have spent a lot of time thinking about alternative ways to convert natural gas into data. Just to give you an example of the type of things I like to do in my private investing and seeding startups and that sort of stuff. Like when I absorb from our energy analysis what must happen, that's one that jumps out at me and one that I'm interested in. So not cultivating any ideas or anything like that, but that's an example of the sort of lateral thinking that we enjoy participating in. Like today, the way to convert natural gas into data is to go through a turbine and to, boil water and spin a turbine and make electricity, and then use that electricity to power a data center. Well, if half the energy of a data center is in cooling, are there ways that we could use natural gas to cool something that doesn't go through electricity?
Right.
Um, because ultimately cooling requires expenditure of energy. So again, this is just sort of the creative thing that we like to indulge in. I don't have any great answers right now, but if I ever thought of one, I know that I could see the unicorn.
All right. Well,
Could be a
Doomberg, let's
huge
agree
fan of
right now that when you
that.
find the startup that's solved this, that I get the first call.
Yeah. You'll be in the seed round, Adam,
All
and then
right.
I'll stop writing Doomberg and you'll stop hosting podcasts.
All right, my friend. Well, Doomberg, look, this has just been so fascinating. Thank you for giving so much of your time. It's been wonderful. You mentioned that you're going to share some links with the audience, so you send those over my way. I'll put them in the show notes. For anybody listening, the Doom Zoom that you talked about, Doomberg, I'll create a redirect at thoughtfulmoney.com/Doomberg. So anybody listening who wants to get that can go to that URL and you'll get redirected to that report. But all the links will be in the description below this video. For folks that have really enjoyed this, Doomberg, and would like to follow you and your work, where should they go?
Yeah, so I've already sent you the two article links, the fixes in and Alberta Clipper, and then China through the lens of energy is the Doom Zoom link. I've sent those three to you now, once you confirm that they work. Anybody who's listening and wants to subscribe to our work can go to doomberg.com. We have three offerings. We have a free offering, which sees the previews for articles, and we're probably publishing about one free article a month now. So if you want to get a taste before you commit, you can just subscribe for free. Our paid tier is $300 a year. You get our 90 plus articles a year that we publish. And then our pro tier is $1,200 a year. And in addition to everything else, you get these monthly webinars where the team really tries to do very thoughtfully a 45-minute to an hour long presentation on topics of the day, like China through the lens of energy, or the latest one we just did, which was Goldileo, the yellow rock at the center of the financial universe. And so those are pretty popular with the subset of our subscribers who can afford that tier as well. Adam, it's always great. Actually, one of the benefits of not speaking to you for so long is we have so much interesting things to talk about. So it was a really fantastic conversation. You're truly one of the best in the business. It's fun to watch Thoughtful Money grow. I knew it would. I knew it would succeed. And I'm very proud of the work that you do. And as your friend offline, as you know, we're good friends. Very happy to see you enjoy so much success as well.
Well, thank you. That's very kind of you. And the success is completely mutual here. The one correction I'll make to what you said is your pro tier stuff. You said talking about topical issues of the day. Well, that's true. I feel like those are the opportunity that you give those clients a chance to really see what the world of tomorrow is going to look like. And it's a huge part of the value that's in them. And there are very few, if any, who have the analytical rigor that you do, Doomberg, in terms of really seeing where the puck is headed. And your call on Carney is a great example of that. So anyways, folks, in wrapping things up here, if you are inspired by some of the ideas that Doomberg has raised here about what the future looks like, both in terms of economic growth from all this energy coming to market, but certainly these specific types of opportunities that he's flagged for us here. If you'd like some help in thinking through how to take advantage of some of these potential opportunities, highly recommend that you tap the brain power of a good financial advisor who can help you think through perhaps some of the best targets to look at, what percentage of your portfolio would make sense to invest in, all that type of stuff. Obviously, you got to find a financial advisor that takes into account all the macro and energy issues that Doomberg and I talked about here, and there aren't a ton that fit that mold. But if you've got a good one who's doing that for you, great, stick with them. If you don't, or you just like a second opinion from one that does fit that mold, consider talking to one of the financial advisors that Thoughtful Money endorses. These are the firms you see with me on this channel week in and week out. So to set up one of those free consultations, if you'd like to do that, just fill out the very short form at thoughtfulmoney.com. Only takes you a couple of seconds to fill out the form. These consultations are totally free. There's no commitment to work with these firms. It's just a free service that they offer. All right, again, Doomberg, it is just such a pleasure to have you on the channel. Really look forward to having you back again soon.
Yeah, appreciate the kind words, Adam, and looking forward to the next time. Let's not make it so long, despite the benefits of a pause.
I completely agree. Doomberg, cannot thank you enough. This has been so wonderful. Thanks so much, and look forward to having you back on again soon. And everybody else, thanks so much for watching.